Welcome back to Squawk Box this morning. Wealthy Americans trying to get ahead of a possible increase in taxes, and they're already working on a new strategy. Robert Frank joins us with more on what the wealthy are doing. Robert.
Good morning, Andrew. Accountants are getting calls from their wealthy clients, all asking the same question. What can we do now to reduce the impact of higher taxes in the coming years? Now, there are three main actions that they are taking. First, they're giving more money to family members. Now, under the current estate and gift tax, individuals can give up to $11.58 million over their lifetime without paying a gift or estate tax. Now, with governments under pressure to raise revenue from that tax, the exemption could fall. So families are giving up to that maximum right now. Now, second, they're also front-loading income. Private business owners are negotiating contracts to take more income this year and more expenses next year. And if they've got partnerships, they're shifting income into 2020 in case those rates go up in 2021. And as we've heard a little bit about, they're moving from high-tax states that were already considering moves to lower-tax states. Now, that has all been accelerated by working from home, and accountants say high earners in finance in New York and tech in California have started the process of changing their tax residency for the 2021 filing. And, of course, Andrew, there are also some discussions about taking a capital gain this year if you're lucky enough to have had one in case those capital gains rates goes up. Whether Biden is in the White House or not, there has to be more revenue on the federal and the state side.
So, by the way, just as a total aside, because I know you know this stuff, have you heard that there's going to be a big fight between the towns and the Hamptons in New York City over taxes?
Yes. There's already a big discussion over, you're talking about whether people who, let's say, decamped to the Hamptons in March or April, and they have not earned their income from work done in New York City, so therefore they're going to claim that New York City does not have a right to that tax, which is close to a 4% tax for New York City residents. And they're going to fight it. And New York City and New York State, whether people have been in Florida during that time and are going to say the same thing for New York State, Robert, there are all these debates going on that will continue.
What about SALT for people in New Jersey and New York, maybe not the ultra-wealthy, but what are the plans there in terms of what Biden would do? Because anybody that's not ultra-wealthy got a huge tax increase, basically, from what happened with the non-deductibility of state taxes.
Well, a lot of the wealthy are hoping and planning for a possible repeal of that deduction limit. And so what they're doing is accountants are saying, look, don't pay your estimated income tax for your state and local tax all in 1 year. Wait until the first quarter of next year to pay the 2020 fourth quarter estimate. Therefore, if they do roll it back, which is possible under Biden or perhaps even Trump, as we've heard on our air, they'll at least save that money for the fourth quarter of 2020. So some of the wealthy are already preparing and hoping for that. Whether it happens or not, we'll see.